we go. Thank you very much for everyone that has dialed in. Very excited this afternoon, so good afternoon to everybody, to have our first Women in Crypto webinar. And this is part of a 4-part webinar series. And we're looking at how to navigate the world of crypto and what it means and what is beyond crypto. We are very grateful that today Women in Crypto have Fusang to be kindly supporting us and sponsoring us for this 4-part series. And our first guest on this series is Henry Chong, and he is the CEO of Fusang.
Hello, and thank you for having me.
So Fusang is Asia's first fully licensed stock exchange that is focused solely on digital assets. So it's a real landmark company. And just a little bit about Women in Crypto. We started the not-for-profit organization last year. And really, I work in the crypto space. And we were finding, I was getting a little bit disillusioned that everyone was saying that there are no women working in crypto. And actually, I personally work with a lot of women. So why not bring us all together, start an organization, give ourselves a platform and a voice. And here we go with our first Women in Crypto webinar. So today we're going to be shining the light on important topics and trends in the digital asset and tokenization space. So Henry and I are going to have a little bit of a relaxed chat. I really would like to stress the fact that this is a live webinar, so we do really want to hear what you have to say. Fire over questions to us. We're really happy to answer them and sort of, make this as interactive as possible. We're so grateful that you've all joined us this afternoon.
Just post them in the chat or in the Q&A box, and we'll do our best to get to them.
Yeah, a little bit of logistics moving around here, but we will get to them. So without further ado, unless anyone has any questions already, Henry, I'll hand it over to you. And if you wouldn't mind just giving a little bit of an intro on yourself, and also, what was the reason that you set out to set up a digital asset stock exchange from scratch? That's obviously a huge undertaking, and I'm guessing that there was, quite a burning reason that led you to do this. So if you wouldn't mind kicking off and sharing a little bit about your story.
Absolutely. I guess like all such ventures, if we knew how hard it would have been going into it, maybe I would have picked something different to do or something a little easier. And I think a little bit of naivete always helps, and boundless optimism, I suppose. But hello, everybody. My name is Henry Chong, and I'm the CEO of the Fusang Group. Fusang builds infrastructure for digital assets, and I'll explain a bit what all that means. So really what Fusang does is we act as a licensed stock exchange where we can list and trade public companies and bonds. And we also provide the end-to-end infrastructure to provide all of the services that go into doing what I call settlement. So when you want to buy one of these digital shares, figuring out how to get money from the hands of investors into the company and getting the company's share back into the hands of investors. And I think both sides are just as important. And maybe we can dig into that a bit later, because to me, that is the crux of why digital assets are so exciting. I get the question all the time where people say, I thought assets were digital anyway. Surely in 2020, shares are digital. And trading these days is very digital. So if I want to buy Apple stock, I can go to any number of online brokers and I can tap a few buttons and buy their stock. But that's the very surface level, the sort of the user interface level. And in the financial world, what people would call the trade matching, right? Matching buyer and seller. But the settlement, okay, now that we've agreed, me buyer and you seller, how do I actually swap the asset for cash is a long and convoluted process that just has layers and layers of intermediaries. And I don't think most people realize just how many layers they are right now in settlements, and also just how much paper, physical paper, that sometimes goes into these processes. I think most people would be petrified if they realized how much fax machines were used to facilitate global settlement infrastructure for both money and securities. And that's really what Fusang and I think the whole digital assets industry is trying to change, to actually solve that base level, where we want to take these traditional paper-based shares and bonds and etc., move them onto blockchains where we can record them as digital share certificates, for example, that will facilitate that base level settlement. And once we do, as I'm sure we'll talk about later on in this webinar, I think it unlocks a whole new world of possibilities beyond the obvious benefits of better, cheaper, quicker, faster, etc. And that's really all that Fusang does today, right? We want to be a marketplace where we can allow people to create, list, and trade digital securities. Because to finish, you know, if you look back on the first ever share certificate that was ever issued in an actual public IPO, was the Dutch VOC, the Dutch equivalent of the British East India Trading Company, and 9th of September. 1606. It's just like about 414 years ago, they issued the first public share certificate, and it's handwritten on parchment. But what I find fascinating is that if you look at that, and if you look at a share certificate today of Apple, they look kind of the same. You know, one was handwritten and one is a PDF, but fundamentally to a technologist, it's the same thing. Right? And shares today, even if you have a PDF copy, it's still a picture of paper. It's not something that is machine readable. It's not digital. You know, you cannot interact with it digitally or programmatically. And that to me is why digital assets are so exciting.
I mean, it is so exciting, and actually quite topical for me, because I just got a share certificate through the post because I just invested in a company, and it was, you know, FedExed over, and it was like a paper certificate. So, you know, we're still here. And I guess there's a whole integration piece that, you know, even someone like myself, when I go to invest in a company, I get hand delivered a share certificate. So we've obviously still got a way to go. It really, you know, highlights how early you are to the space. And I think, you know, I think that's interesting for people that operationally we're moving toward certificates, digital certificates. So there will not be any paper replica, if you like. But if we look beyond that, so obviously all the operational efficiencies we're going to gain, why should someone ultimately care? So now you have a digital security, or, you know, you own part of an asset that is represented digitally, native digital on a blockchain. Why should anyone care about that? What does that open up in terms of opportunities going forwards?
Absolutely. You know, I think the benefit, the first level benefit of digital is always, as you said, better, cheaper, quicker, faster. But that's not the interesting thing. Right? The interesting thing is, what does that unlock that you couldn't do before?
Exactly.
And to me, very insightful analogies are to look at e-commerce and social media. So, you know, when e-commerce first came along, I think a lot of people thought it would be mail order catalogs on a website. Right? Like, okay, sure, I can go to a website, but, you know, they didn't really understand how that would revolutionize the interactions between companies and its customers. And the biggest thing that it did was disintermediation. Once upon a time, if I made clothes and I wanted to sell clothes, I would go to a department store like Lane Crawford and say, please, Lane Crawford, carry my stuff and please put it in the front of the store and etc., because they were the intermediaries. If the Lane Crawfords of the world, or the Neiman Marcuses of the world liked you, you made it. And if they didn't, you were dead in the water. You sold to your local friends and family, basically. The intermediaries held all of the control. Today, you can start a company in your garage, and with the help of, let's say, Amazon, you can sell online to your customers anywhere. And do fulfillment anywhere in the world at a scale you could just never imagine before. And that has unlocked a whole new kind of companies that can exist, right? You can now start, for example, very niche companies that cater to a very specific customer base, but where that customer base is worldwide. Right? I tell people, hey, you just need to find 2,000 true fans somewhere in the world for your product, and you can start a company. Doesn't matter where they are or who they are. The same has happened for social media. Social media wasn't just glossy magazines online, right? Social media, again, has allowed companies to communicate directly to their customers like never before, and has also allowed customers to communicate back to companies, right? It's now become a two-way process. And once upon a time, companies had these marketing departments that would come up with the message, right? Where you would figure out what your company line is and your story and your talking points, and you go out in media to say so. It doesn't work like that anymore. Today, a company's brand is what people say about you on social media. You know, the example I always give is whenever we want to stay in a hotel, you may go to that hotel's website, but you don't really trust the pictures you see there because you assume it's always going to look nice. I certainly type in, you know, XYZ hotel review, and I see what people write about it. I see the real pictures, right? I see what people post about their experiences. And I trust that much more than I trust the company's own marketing and communication. And I think both of those are examples, as I said, of disintermediation, where these one-time gatekeepers have been removed and companies are forced to actually interact and communicate and sell directly to the end customer. And I think the same thing is going to happen with securities. You know, the buying and selling is half of a company's process, right? It's one half, the P&L statement. You have the whole balance sheet, right? The company's capital structure. Who are your shareholders? Who owns your company? Yeah. Right now, that entire process of a company interacting with its shareholders is exactly the same as when companies had to sell through department stores. It is run through intermediaries. And if you want to raise money, you go to an intermediary like an investment bank and say, please, investment bank, sell my shares or cover my product. And if they like you enough, then fine, you do it. And if they don't, again, you sell to your friends and your family. And I think that the exact same disintermediation will happen in a digital fashion for securities, for shares, for bonds, where companies can go direct to the consumers in the same channels that they currently communicate with the consumers and say, hey, if you like my product so much and want to buy my stuff, why don't you also become a shareholder, right? Especially if you are like a loyal, true fan where you not only buy my products, you tell everyone else to buy my products. I really want to have you on side as a shareholder. But right now, it's just not operationally feasible for companies to make that happen. It's not feasible in terms of the actual placing of securities, and it's certainly not feasible for most private companies to have huge shareholder bases. And that's what I think that digital assets will uniquely enable, that disintermediation and that direct contact with customers.
So can we just make this sort of tangible for everyone online? So you've obviously set up this digital asset exchange. It's live, it's fully licensed. So what's in the pipeline? Like what are actual use cases that people can really sort of get their heads around? And how is it leveling the playing field, as you say? Like what is empowering about this new model? If you could just highlight specific examples, that would be great.
Yes. Every company in the world has a marketing department that talks to its customers. And then if you're a public company, you have an investor relations team that talk to your shareholders. Two teams talking to two different groups of people. And no surprise, people complain that companies don't look out for their customers' interests. They only look out for shareholder interests because they're two different groups of people. And it's always that inherent conflict. And I think that if we can merge those two groups of people and start to turn some of these stakeholders into shareholders, that hopefully we will get greater alignment. And not just in a touchy-feely sense, I think this will be actually very good for business, right? We take it as a given in the startup world that you can and should distribute equity to your employees because that way they will care about your company. If your company doesn't have customers who like you, you don't have a business, right? You need customers who like you and pay you and purchase your products, and then you have a company. And so I think companies can and should distribute equity to your customers as well and get their customers on side as well. And beyond that first level of, hey, if you should create alignment between a company and its stakeholders, as I said, the interesting thing is what can I start to do, or how can I begin to rethink business models in a different way to think about companies as these value networks? Because to me, that's all a company is. A company is a construct. Fusang is collective delusion, right? If all the employees choose to show up at work every day, we have a company. If
And
one day no one shows up at all, then we're dead in the water, right?
Yeah.
Same with our customers, same with our stakeholder groups. And so, for example, with Fusang ourselves, we have obviously turned 100% of our equity into purely digital format. So we've replaced all of our paper shares with digital share certificates. But like I said, beyond our ability to now have a much bigger shareholder base, one thing that we started to do is to say, okay, well, what is the fundamental value network that we're trying to create as a business? We are an exchange, as you said. All exchanges live and die based on how many buyers do you have, how many sellers do you have. We're a marketplace. Mm-hmm. And so we need to generate both of those things at the same time. And so one thing that we said is, okay, well, traditionally as a digital business, if we wanted to get more customers, more users, more investors, we would go run ads on Facebook. And you would pay Facebook, whatever it is, $20 per user for conversions, and we work out our own math. And what I said instead is, well, why don't we ask users to come and sign up for our exchange, and we will pay them in our shares for signing up to our exchange. Instead of me paying Facebook, why don't I just pay the users? And instead of me paying cash out of pocket, I will issue them with shares. Mm. It means that I don't have to pay Facebook, right? Number one, but also number two, I think that if a user has shares in a company, even if it's just a little bit, they will care about their company just that much more, right? They'll pay just a little more attention. They will talk to their friends just a little more about it. And, to me, it just makes a lot of sense where the more users we get, the more value we have as a company have. So why don't we give back some of that value to the users for giving us value? And as I said, if they come, they become a user, they trade on our exchange, we make money. Hey, their equity is worth just a little bit more money. And I hope that this all becomes a nice virtuous cycle. And to me, that's a very basic example of, yes, as I said, digital means more shareholders, but how can we begin to use our shares, our digital shares, to rethink these value networks? And I think that's exactly where companies going forward will need to think about, where they'll need to say, okay, sure, right? Digital is great in terms of more shareholders, easier for people to invest, but how can I rethink literally the fundamentals of what is my business doing? Like, who am I serving? Who am I adding value to? How do I bring them into this whole value network? And how can I give them equity so that they literally are part of my company and we are fully aligned?
Yeah. So I think in summary, you're kind of changing the dynamic of investing, right? Because by taking out the intermediary and building a more direct link with your consumers, it's more engaging, and it's more about the stakeholders. So, to break down stakeholder capitalism it's about your stakeholders. We actually have a question that's come through on stakeholder economics, asking, will it help people use their skills and generate new money in the form of fiat or cryptocurrency in a decentralized manner, making financial inclusion a reality? So how do we both see this happening?
Yes. Well, I can go first. I actually, and we can talk about this a little later, I don't like the term decentralized. As I said, I prefer to think of things as disintermediating.
That's interesting.
Because, as I said, whether it's
decentralized, like the biggest buzzword, it's quite shocking that you're saying that.
To me, again, the biggest parallel is the internet, right? Where when the internet first started, I guess people were hoping it would become this decentralized libertarian utopia. It hasn't quite turned out. You have the Googles and Amazons of the world, and yes, you do have a long tail of websites and businesses, but there is a great deal of centralization. What the internet has enabled is not so much decentralization, but as I said, disintermediation, where it's allowed people to remove the layers in between and go direct to consumer, for example. As a business, I can sell direct to consumer, I can communicate direct to consumer. And I think, as I said, the same thing will happen for digital shares, where companies can sell their shares direct to their shareholders or stakeholders, as opposed to, I think, where a lot of people imagine decentralization, which for a lot of different reasons, I think is not likely to happen anytime soon.
Yeah. I mean, Bitcoin obviously being the primary use case of a decentralized network.
It is, but even with Bitcoin, there aren't a lot of hard statistics around, but I'm willing to bet that 90+% of Bitcoins are held by centralized parties in some form. exchanges, custodial
That's
parties,
controversial, Henry.
wallets, etc. Right? And when you actually look at the number, when you actually total up all the figures, how many people are really able to manage their own Bitcoin, access, run their own Bitcoin node and access, the Bitcoin network directly without anyone else's help, I'm willing to bet it's not that many. And I think, like I said, I think that's besides the point. The point is now that if I wanted to send a Bitcoin to you, I can do that without needing intermediaries. It's disintermediated. It's much more point to point. I think that's the real benefit that digital brings in many cases. And maybe to answer that question specifically, we're talking about using your skills and I guess just generally financial incentives going forward. I do think that both cryptocurrencies and digital assets and securities more broadly can and will become a bigger part of how those value networks form. I don't personally think, again, we're going to jump straight to this libertarian utopia where everyone is on an hourly pay-as-you-go basis and you do piecemeal work and you get automatically paid, because I actually don't think that's what people want. Right? The gig economy obviously is a big thing today with companies like Uber, and there are issues with that. There are benefits to centralization. I think what's important, as I said, is that we can rethink the value networks. And I don't think that this is, I really want to emphasize this is not a touchy-feely thing, right?
Yeah.
Sure, the World Economic Forum is talking about stakeholder capitalism, often in the context of, let's say, the environment, and that's very important. But to me, as a business owner, I think stakeholder capitalism is mission critical because I don't think companies will long survive if you don't look after your stakeholders. Yeah. I think all the best companies and brands in the world are the ones that have managed to create a sense of not just loyalty, but identity with their customers. And the example I like to give is, whenever a brand has become part of someone's identity, because they use the words I am in front of it. Like, I am an Apple user. I am an iPhone user. I don't say I bought last year's iPhone. I say I am an iPhone user. It's part of who I am. And if I am an iPhone user, of course I buy iPhones. That just makes sense. Yeah. Right? If I just am a transactional customer of a phone, then every year when I go out to buy a new phone, I buy whatever is cheapest or makes the most sense. It's radically different. And I think that figuring out ways, as I said, to look at these value networks is just a great example of how to tie people into brands a bit tighter, which I actually think is great for those businesses.
So I think let's take a step back from the actual sort of inner workings of what's happening and take a look at the STO market, because we've got a question here, and thank you to Farhad, by the way, Farhad, for the earlier question. We've got a question from Emma Lynn Gartner on how many STOs are listed on Fusang now, what are the listing requirements, and are the requirements less stringent than listing as an IPO? So I think this is important, to actually take a step back from the theory and talk about in practice what is happening in the STO space.
Absolutely. I'll answer this question in two quick parts. First things first, I really don't like the term STO because most of the STOs that I've seen...
You don't like the word decentralization.
Yes, absolutely. and just like with a lot of DeFi projects, which are of perhaps slightly uncertain provenance, let's use that term, I see a lot of STOs as just being ICOs wrapped in a security wrapper. They were people who wanted to raise money through an ICO, and then some lawyer told them that that was illegal, and so they said, okay, fine, I'll call it a security. But most of the STOs we see in the market today are weird and wacky structures. They are not shares, they are not debt, they are not funds, they are an other. In many cases, some form of contractual obligation. And contractual obligations are inherently messy because they must be enforced. Different from a share where you just have certain intrinsic rights. Every country in the world has a Companies Act that guarantees shareholders certain rights. And so really, at least, for Fusang very specifically, I prefer to call them digital securities because that's really what we're looking at. Can we take paper-based shares, bonds, etc., and convert them, the paper share certificate, into a digital share certificate, but where the underlying asset is still just the company share? We haven't really changed anything about that in terms of substance. So that's the first thing, and that's really what we're looking at. In terms of listing, so we've now listed, we've just done our first 2 listings on Fusang, a couple more coming. Both of those are listed on what we call our private market. So those are private companies. And because they're private, we restrict them to only being traded among accredited and professional investors. These are companies that do not want to become publicly listed. But as with a lot of startups these days, say that, you know what, I want to, number one, dramatically expand my shareholder base so that I can take many more shareholders, potentially hundreds, in a way that is operationally feasible. And I do want to provide a private market for these people to trade among themselves. And so we facilitate that. But Fusang also facilitates full-fledged public market IPOs, where we will take a company public and we will allow that company to be traded among retail investors. And we've got one coming up in a couple of weeks, which we can talk about later.
Yeah. And so I guess to Emma's question, how much easier is that? The IPO process,
the actual requirements you should expect would be identical to going and listing on most exchanges. In terms of what we need to see, if you want to get listed as a public company, we'll require all the same disclosures that you would on most exchanges.
No shortcuts.
No shortcuts. But what I think we can do radically differently is, as I said, the underlying process of how that works. Today, still, for many IPOs in Hong Kong, if you want to subscribe, you go to your broker, you get a stack of paper, you read through your prospectus, you fill in forms. It is an exceedingly manual process, again, with layers and layers and layers of intermediaries. You know, Apple doesn't know who its shareholders are. It's interesting to think about. They have no clue. Right? They'll have a bunch of banks and brokers on their cap table who will in turn hold shares for people and people.
And transfer. And actually, it might not be accurate. There actually might be more Apple shareholders.
I can guarantee that at any point in time it is not accurate. It's not possible.
Because you're relying on transfer of.
So there is always some error at the margins, some chance in place. It is guaranteed that it is never current. And so Apple cannot do things like say, hey, Henry, if you're an Apple shareholder, walk into an Apple store, scan a QR code, and because I know you're a shareholder, I'll give you a discount. It's just not operationally feasible. That's something that we can begin to do for companies once they have digital shares. And of course, as I said, we can actually place these shares direct to consumer. So I'll give you an example. I was on Disney's website a few months ago. And because I'm fascinated by how Disney positions...
Mulan.
Not downloading Mulan, that would be illegal. But because I am fascinated by how Disney positions its vision and mission, I think it's fantastic. And I was reading on their corporate website and how they talk about what their brand does, right? What does Disney do at its core in terms of telling stories, for example? But as I was going through their corporate website, and then halfway through it says, you know, Disney makes the best stories in the world, using the best technologies to reach people all over the world. And they have a Disney stock ticker and a share price. And then in big bold letters, it says, you cannot buy stock from Disney. Go talk to your local broker /RIA. And I found that fascinating because when you're selling a product, what other company says, oh, by the way, you can't buy things from me. Go to your local department store. It's how it used to be, right? It's no different. No, we don't sell direct to you. Sorry.
So you don't have that disclaimer on.
And so I think companies can and should place direct to consumers. Fusang obviously can facilitate that, where whether a private offering, for example, for accredited investors, or a full-fledged public offering, we think we can allow people to go through a purely online onboarding process, KYC, email, etc., take in money and issue digital shares. We can help companies do that so that a company, maybe like Disney one day, could say, you know what? Yes, Disney does sell to its customers. In fact, that's exactly who Disney wants as shareholders, its customers. We want parents to go to Disneyland and, you know, when they interact with our products and their kids, you know, go on our rides, that is the exact point at which we should be identifying our shareholders. And those are the exact people that we should be placing shares to.
No, I agree. And we've got, hello, Esme. Nice to have you on here. We've got Esme Hodson sending us a question. Her question is, how do you see consumer protection and appropriateness education, awareness and self-regulation developing in line with the technology? And that's actually an interesting piece. So it's the legal versus...
Well, more than that, the unfortunate truth is that, you know, the digital asset world is messy. I wouldn't use the word scam, but it is messy. And there are, quite frankly, a lot of people who just want to get rich by placing random things to people. And that's deeply unfortunate. To me, digital assets are just a technology layer. No different than when we moved from open outcry trading of stock in pits with hand signals to electronic trading. It's just a different technology. It should not change anything about the underlying thing that we are selling. No different than e-commerce is still companies selling things to consumers. It's just a different channel, different mechanism. Instead of buying something in a department store, you buy it online. And I remember when my parents thought that e-commerce was black magic. They would refuse to do it. They're like, I will not use my credit card online. That's how you get into trouble. I will mail them a check, maybe.
My parents are
but in
still
any case,
like
I'm
that.
just like, I don't want to buy things online. How can you trust them? The same thing, right?
Yeah.
How can you trust the channel? It's all a scam. I want to go to a department store where I can touch and feel my product. We're going through the exact same thing in the digital asset world, where unfortunately a lot of it is a scam. And people say, I just want to talk to a broker where I can touch and feel my product. And I'm really hoping that we can evolve the industry to a point in which, just like we buy things off Amazon happily all the time, we say, hey, what's important is my trust in the seller. Do I trust that this person, this company who are selling their shares, do I know who they are? Do I like them, right? Do I like Disney? Do I think they make good products? Did I like the last Mulan movie? And what do I think of their future trajectory in terms of movie making, for example? Those are the questions people should ask. And I actually think that digital securities in the medium to long term will make that easier. Because right now, worth asking the audience, how many of you, what percentage of your net worth is invested into a company that you either work for or where you directly use their products or you touch and feel them every day? I find it fascinating how much of all of our net worths are invested into companies with which we have no direct interaction, right? We saw a company over there, and we buy something, right? Or we read a prospectus.
And
so
we don't directly.
We are not customers of that company, right?
No, we go by what we perceive to be a good. Well, because we're not stakeholders.
Exactly, but it's third-hand knowledge, right? Versus, this is maybe not a great analogy, but when you walk into a restaurant, when you eat at a restaurant, the minute service quality or food quality deteriorates. Immediately, you're like, oh, it's not the same anymore. This place is going down, right? Because you literally touch and feel their product. And I think it should be the same. That's what people should invest into. Warren Buffett, best invest in the planet. That's exactly what he says, right? Invest in your circle of competence. You should invest into companies and products where you know them, where you use their product. Maybe ideally where you work for that company, right? Where you have inside information. To me, that is exactly the kind of companies that you should be investing into, as opposed to, oh, I read a prospectus and some broker told me that it was a good investment. And then no surprise, I'm like, whoops, I lost money. Right. And I think that maybe to talk a bit about, I've seen that there's a very interesting report out recently about women's investment patterns and how to talk about women in crypto and how that differs. And I think that is actually a great topic because if I'm reading the research correctly, women are, I wouldn't actually say more risk averse, but I think I would argue that women don't want to invest into things with which they have less familiarity.
Okay, right? let's just go with the sweeping generalizations theme.
That's what the report says, if I was reading correctly, right? Where they say that that women, I'm just reading the report. They said they're more risk averse, but I don't actually buy that argument. I just think that women quite rightly actually want to know a bit more about a product before buying it, as opposed to saying, my broker told me, okay, so,
generalization. I have managed money before, and I've had women that I manage money on behalf of. And I have to say, some of the riskiest investors I've ever looked after have been women who want just 150% leveraged stock portfolio in tech stocks. So I don't know.
I'm also willing to bet, though, that if people come talk to you as a professional, that's also a small minority, right? And the truth is, never mind women, people across the world, certainly millennials under the age of, I think, 29 today, are dramatically underinvested. The average millennial has never bought.
I don't think they're interested in stocks and bonds. I mean, I think this is a big question for the crypto and digital asset space, is that they simply I feel like a dinosaur when I talk about stocks and bonds. They're like, why would I ever go and invest in that? So even with the Robin Hoods of the world that are sort of making that a lot more accessible, I do think that the newest and brightest minds coming out want to invest in digital assets, and that includes crypto, that includes security tokens, it includes all the kind of instruments that are available on this type of technology. So that's where your exchange, and actually that comes to an interesting point, and there is actually quite a technical question coming through on counterparty risk. But before we get to that, how do you see, how is your exchange going to facilitate the different types of digital assets? Because obviously I think today we've been talking very much about security tokens, but what about native crypto, so Bitcoin or Ether? Are you going to be able to offer your clients of your exchange the ability to trade different types of crypto and digital assets?
So we do already. We trade a couple of what I call cryptocurrencies, and I use that term internally to refer to things that function like a currency. And we think of this like FX, and that's exactly why we offer it to our clients. Just like you can move US dollars into our exchange, we want you to be able to move and trade in Bitcoin. It's just another currency option, just like USD and renminbi and Bitcoin, right? We allow you to deal in all of those currencies. But really, in terms of investments, I as fascinating as I find cryptocurrencies, my personal view is that, especially if they become widely used, then actually I don't think they'll work. The investment will work out in the way people imagine. So the US dollar is probably the most liquid currency in the world. No one buys the US dollar hoping to strike it rich. When a medium of exchange is highly liquid, it conversely is not very useful as an investment. People who remember back to their high school economics classes, the more velocity of money increases, the more value decreases. You actually don't want something to be moving around all the time if you want it to be worth a lot. That's a very separate question. But like I said, I just want to circle back to say that when people are making investments, men, women, kids, millennials, doesn't matter. I honestly believe that we work for our money with blood, sweat, and tears. And you can and should invest into companies, into businesses that you believe in. Ideally,
and I think some of the best investors do go for that. Okay, so let's move on to Jean-Paul has a question. How does Fusang deal or solve counterparty risk on their exchange?
We are a fully centralized exchange that requires collateral to be pre-funded, which means that you need to either deposit the fiat, like US dollars or renminbi, into our custody, or your digital securities that you want to trade, and we facilitate the settlement in between. That is part of the reason why, as I said earlier, we operate as a centralized exchange, not a decentralized exchange, because once you are decentralized, counterparty risk becomes a massive problem. And I guess in a very simple sense, we view that is our job, right? Fusang does not buy or sell securities apart from our own shares. We don't create these things ourselves. That would be a huge conflict, right? What we do is we provide a platform to allow buyers and sellers to meet and swap. But I don't actually think it's good enough if all we do is match buyers and sellers. The analogy I always like to give is eBay versus Amazon. For those of us who are a little older and remember trying to use eBay in the early days, because I do meet a lot of people who never used eBay in their life already, where, Amazon in the early days did the exact same thing as eBay. It was an auction-based second-hand marketplace. And they very quickly realized that if that's all they did, it was never going to take off, because the problem with eBay is that, yes, I go online and I match the buyer and the seller, but fulfillment was very uncertain, right? I have to mail you a check and then maybe you send me some goods. It was very troublesome and wholly uncertain. Now, eBay later on figured out that they had to fix at least the money settlement leg. And that's what PayPal was, which is today actually worth like 5 times what the whole of eBay is worth. But they still never figured out the shipping part, right? So you had to DIY. Amazon's insight was that they had to combine the order matching, the buyer and the seller, with a fulfillment platform. So that when you, the buyer, see something on Amazon and you click to buy, you have a high degree of confidence that it will end up on your doorstep in 2 days' time.
Yeah.
And until they did that, people didn't trust e-commerce. I think the same thing has to happen for digital securities, where people need to have enough comfort and familiarity where they say, I don't really understand how the technology works, and that's okay. I just know that I want to buy something. I know that this company whose products I use and love, I trust that they're selling these things to me. I trust the mechanism works. I want to click to buy, and I trust that I get these digital shares into my care, and that there are people all along the value chain, not just Fusang, helping to do this in a safe manner.
Great. Well, Jean-Paul, I hope that answered your question. A pretty interesting analogy there to use to answer that, but that's great. We're down to the 5-minute countdown. So I just want to check if there are any other questions. And if not, perhaps...
Do you have a question?
What's
one burning question you wanted to ask?
Burning question. I have many burning questions, Henry. I think the question I want to ask is, you've come so far, you've built, and if this hasn't come across, Henry has built this digital asset exchange from scratch in about 2 years, which is really, really impressive. And, it's because of people like you that the industry is moving forwards. And so, thank you for that. But what I would like to know is where you stand today and you're looking out, you've come so far, but what are your immediate priorities now? What are you really focused on delivering today? Because obviously it's going to be, you're in this for the long game, right? You're not in and out. So what are you focusing on now? And does anything keep you up at night?
Many things keep me up at night, but we have
like Women in Crypto webinars.
We have only one single focus right now, and that is to find interesting issuers. And by issuers, we mean companies that want to sell their securities, shares or bonds. I say this because, as I said, we're a marketplace. And unless we find good and solid companies that want to sell their securities for investors to buy, we have no other function. And I think a lot of people in the digital asset industry lose sight of that. They're focused on building a cool platform or focused on God knows what. And they forget to say, wait, as you said, like, who cares? Why should I care about digital? It has to be that you can get access to interesting companies you couldn't get access to otherwise, and get benefits from those companies that you could never get access to otherwise. And that's the only thing we're squarely focused on. So if any of you listening have an interesting company that you own, operate, or even just work for a company or are the consumer of a company that you think would be great to get listed, we would love to talk to them. Like I said, that's our sole job, right?
And that's so interesting, but that's exactly sort of summarizing everything we've been talking about. We can go directly to people that are interested in Fusang. They are in turn operating or running a company, and equally they can come in and speak to you and look to list on Fusang. So this has been amazing. So if anyone wants to find out more about Fusang and list their company on your exchange, how do they get in touch with you?
Go to our website, Google us at fusang.co, and there's a giant register button on our website if you want to become a user, an investor, or if you want to let us know that you have something interesting that you want to list. But beyond that, we are recording this webinar. It'll be posted on YouTube. So go to Fusang's YouTube channel. Just Google up, search for us in YouTube, and share this video around with anyone that you think might be useful.
Interested in Fusang.
Not just interested in Fusang, interested in digital assets or in the future Women in Crypto series, because this is one of 4, and many more to come, I believe.
Exactly. I was going to end it there to say that, thank you for being with us on this first Women in Crypto webinar. We've got more in store for Women in Crypto, and we've got more webinars, we've got events, we've got a website that we're working on, so lots of exciting developments there. And so yes, just want to thank everyone so much for joining this afternoon, and for Henry for being a spectacular guest, and again to Fusang. So thank you everyone, and stay tuned for the next one.
Thank you everybody. Bye.